This is a download from BFM 89.9, the business station.
So, good morning, George. Greece has obtained some reprieve, securing a 4-month extension to their Eurozone funding problems. And for the time being, do you think this totally avoids, or is there still some risk of the exit of Greece from Europe?
Good morning, Julian. There's still risk, but they're traveling down the right path to avoid an exit. There are still several key issues that are undecided, but both sides have now taken the first step in rebuilding the trust, which is a long process, but at least it started. Yes, this week we expect there will be some more drama before the European finance ministers extend Greece's financial rescue program by the indicated 4 months. Greece may decide to do what Cyprus did back in early 2013 when its bailout program was rejected. Controls were rolled out very quickly as their program was rejected, and ultimately the bottom line was Cyprus was not kicked out of the Eurozone. So that kind of drama may occur without necessarily having a longer-term impact. There may be a relatively acceptable way for Greece to deliver what is needed. Although Athens has committed to continue running primary budget surpluses, they may be able to lower those surplus targets, and that was the most significant concession up front that the Greek government won in last week's talks. And Greece may be able to indicate that it will crack down on tax evasion and streamline its civil service in its bill to secure a bailout extension. That might be easier to sell both internally within Greece and externally to the Eurozone.
We also heard Irish Finance Minister Michael Noonan say that there was nothing in that agreement that suggested a concession. Are these compromises against what the Greek voters want?
No, they're not, but they are much more than what was expected. So it's going to be a real sell job. Now, Tsipras is engaged in a theatrical battle of wills with Berlin. So up front, this is a real crowd pleaser back in Greece. So he's doing all the right things on stage. But criticism is surfacing within Greece. And any compromise deal will be a very hard sell within Syriza, whose Congress and Central Committee and political bureaus are more comfortable and familiar with Marxist dialectic than government. The base of the party includes many who have made sacrifices in Greece's past history, from resistance, civil war, prison, exiles. These people will want to be heard. They want to be part of the game because they've earned that right. So they just won't go along with whatever's handed to them. So far, discipline within Syriza is holding up very well. And Tsipras has proven to be a very talented politician and very good at maneuvering and zigzagging. During his campaign, he campaigned alone rather than alongside other party groups. And he has been likened to Maradona, who was a legendary Argentine footballer who took a second-class football team to the top. This has been what Tsipras has done so far. Without Tsipras, Syriza would be nothing. So he has more power than what would normally be expected within his party. Much will be made about arguing over the details, but ultimately, I think Tsipras has a very good chance of bringing it across the goal line.
Meanwhile, we see some signs in Europe that economic activity seems to be gathering pace, as seen from some PMI surveys or purchasing managers surveys. Do you place great trust in these numbers that they indicate some kind of recovery, or are you looking for something more?
Well, I do put trust in them. I do think that they're on the road to recovery, Julian. But in terms of investments, they are where the United States was some time ago, where valuations are based more on easy monetary policies, which will start next week, rather than the economic progress. Yes, economic progress is there. We are seeing it. Unfortunately, the one thing that we do see, that there is a risk of deflation taking hold in the Eurozone. That has not gone away. But other than that, yes, we're seeing PMI, et cetera. All the details are coming out, and we do see economic progress. More needs to be done. But in terms of valuation, Julian, it's still being based more on easy monetary policy than economic progress.
So where do you stand right now on Europe investments?
Well, we pick and choose. In France, we like Dassault Systems. Most of these are extended, given the most recent run-up, Julian. So we're expecting to be buyers on pullbacks. Gecina also in France, in Germany, Infineon Technologies, Nordex in Germany. In the United Kingdom, we have ASOS and Phoenix Group. In other words, we have very specific stocks that we do like. Now, banking in general, we are concerned with. Lloyds Banking and Atkins in London. Also, Deutsche Bank and Banco Santander, they are expected to fail the Federal Reserve stress test over shortcomings and how they measure and predict potential losses and risks. So we're basically staying away from the banking industry.
So is it fair to say that you're not positive about Europe as a whole, but there are pockets of opportunities?
Pockets of investment opportunities, Julian. Positive about the economic progress, but in terms of investments, we see the market still being valued on non-economic progress, more on easy monetary policy, which we think will continue for a while. But they're going through the same progress that the United States has gone through. We're just a little bit further down the road.
Also the Brexit avoidance and some positive GDP numbers coming out of Japan last week pushed stock markets there to about a 15-year high. What do you think of Japan? Is this likely to come out of the woods soon?
Well, it certainly is coming out of the woods. It's being helped by economic policy. Their gross domestic product grew 2.2%. That was less than the 3.6% that was expected. But nonetheless, what is crucial is that their economy is out of recession and the worst is over. So, and you look at exports. Exports jumped 2.7% in the fourth quarter. That was the largest increase in a year. So this robust gain was very indicative of the positive impact of the weak yen. But nevertheless, we are seeing, in terms of economic progress, we are seeing some real progress. The real test, Julian, is when we have to go to the other side, when their tax policy begins to increase and they have to start to ease off the monetary policy that's been helping them. But we're not there yet. So far, so good.
So when we talk about a 15-year high, is there more to go in Japan stock markets?
Yes, I do think that there is more to go, and I do think there's more to go in Europe. But again, these are not markets that are being valued based on economics and fundamentals. So at some point there will be a pullback when the transition has to be made away from easy monetary rates and just pure economic growth. But we're not there yet. So yes, I do expect some continued progress. It may start to narrow in terms of number of stocks that are participating, but there'll still be economic progress. There'll still be economic progress, which ultimately will drive the markets, but not quite yet.
Thank you. That was Dodge O'Dolan, Chairman and Chief Investment Officer at Lander & Fuse Capital Managers in New York.
Thank you for listening to this podcast. To find more great interviews, go to bfm.my or find us on iTunes. BFM 89.9, the business station.